Hey, so I've been keeping my eye on a tech stock that's not always in the spotlight, but I'm convinced it's got that under the radar vibe with big potential. You know how everybody's been talking about artificial intelligence left and right? Well, this company has a serious foothold in AI hardware. Plus, it's tied to everything from smartphones to cars. The best part is, a lot of people aren't giving it much love yet. I'm talking about Qualcomm. Let's talk about what happened in the past year or so, okay? So Qualcomm went through a bunch of legal problems that had some investors shaking their heads. The biggest one involved a dispute with ARM, which is basically the backbone for most chip designs. There was a lawsuit over chip licensing that got pretty intense because Qualcomm had acquired a company called Nuvia. ARM argued designs were stepping on its architecture license. This legal cloud hung over Qualcomm and it rattled the market a bit. Investors hate unresolved lawsuits. They'd rather not touch a stock that's entangled in core battles, so Qualcomm's share price basically got stuck in the mud for a while. Now, here's the thing: Qualcomm came out on top in that lawsuit. The jury took Qualcomm's side, clearing up a huge shadow on the company. Before that verdict, a lot of folks were worried that Qualcomm might be forced to redesign major products or pay massive fees. Instead, the legal drama eased up, and that's always a relief for any stock. So, one big chunk of negativity gone. Now, investors are free to focus in on the company's actual growth story. So you might look at AI and automatically think about the big guys, right? Nvidia hogs the headlines because they've got the data center AI hardware game mostly locked down. Broadcom also commands some respect in the high performance computing. Qualcomm, on the other hand, has historically been about modems and mobile chips, but that viewpoint is missing the bigger picture. Qualcomm is a key player when it comes to edge AI. Think autonomous cars, augmented reality devices, and connected Internet of Things gadgets. That's their specialty. Now, it's sitting at a forward earnings multiple around 14x. Compare that to Nvidia's 50x or Broadcom's 37x, and you realize Qualcomm is trading well under these other semiconductor and AI focused companies. The question is why? Part of it ties back to worries about whether Apple might eventually boot Qualcomm's modems. Another part is that Qualcomm's not seen as a pure AI play because they're not all about data centers. But that also means it could be undervalued if they carve out a strong chunk of the edge AI market. And there are big numbers to back that up. They're working on snapping up huge opportunities in automotive, IoT, and next gen PCs. If you're on board with AI spreading everywhere from the fridge to your car to your laptop, that's Qualcomm's home turf. Now, what's the deal with Apple? Everyone's heard about Apple trying to develop its own modems for years. Apple even bought Intel's modem business a while back, hoping to replace Qualcomm solutions. The truth is, building a world-class modem is ridiculously complicated. You can't just fix up a few lines of code and call it a day. You need compatibility across global networks, power efficiency, and a track record that's tested worldwide. Qualcomm's been doing that for decades, so they've got a serious advantage in terms of knowledge and real-world testing. Apple's not going to give up. They'll keep trying to craft something in-house, but so far they face delay after delay. There's talk Apple might unveil a first-gen modem in a lower tier of iPhones so they can see how it runs in smaller user bases before committing to a flagship device. Even if Apple eventually succeeds, Qualcomm still holds a bunch of essential patents, so Apple would owe licensing fees no matter what. So if you're looking for a more forward-thinking reason to like Qualcomm, you've got to check out what they've been doing in automotive. Their Snapdragon digital chassis has been pulling in design wins left and right. Car makers are going nuts for connected software-heavy vehicles, stuff that relies on 5G, integrated cockpit systems, and advanced driver asset technologies. Qualcomm has been building that pipeline for a few years. Based on what I've seen, automotive revenues at Qualcomm soared around 68% recently, which is a huge growth for a segment that used to be a small piece of the pie. Then there's IoT, which is short for the Internet of Things. A lot of that success comes from the same underlying technology, the Snapdragon chips. They're not only in the phone, they're also in AR headsets, smart home devices, industrial sensors, connected cameras, you name it. Qualcomm's trying to make it easier for enterprises to build completed solutions with their hardware. That means it's not just about shipping chips, it's about offering frameworks so companies can integrate Qualcomm's technology quickly. That's how they plan to get to 14 billion in IoT revenue by 2029. It's ambitious, sure, but it's not out of the reach when you consider how rapidly the edge AI and IoT markets are growing. And of course, AI is becoming the big wave for everything mobile. The idea is that phones, laptops, and other devices will handle more AI tasks on devices rather than shipping data off to some big cloud server. This cuts down on latency, which is that annoying lag you get when you're waiting for something to process. Qualcomm's got a strong track record in making chips that balance performance with battery efficiency. So they're uniquely positioned to handle AI workloads right on your smartphone or device. They've been investing heavily in the hardware that can handle AI on the edge. And a lot of big name partners, think Microsoft, Amazon, are working with them to integrate that tech into their next gen products. Sometimes a company can talk a big game about the future, but if their financials don't back it up, it's all smoke and mirrors, right? That's not the case with Qualcomm. They're consistently pulling in revenue numbers that are surprisingly solid, topping 10 billion in a quarter. Automotive alone closed in on 900 million, which again used to be a silver of their business. Meanwhile, their licensing segment cranked out 1.5 billion last quarter. That's the bread and butter that helps keep cash flow strong. Even with R&D expensive, they've returned 2 billion to shareholders via buybacks and dividends. That's evidence they care about their shareholder value. What gets me excited is they're aiming for a 50-50 split between handset and non-handset revenue by 2030. So, in the future, they won't be so dependent on phone sales. That means less exposure to cyclical smartphone markets and more growth from automotive, IoT, and AI. They've already talked about how they want to capture 70% of the PC notebook share by 2026 through partnerships with Microsoft, which is rolling out AI-enabled Windows solutions. These are big bets, but they seem to be paying off. Their chip business also doubled revenue from 2019 to 2024, with operating margins going from 15% to nearly 30%. That kind of margin expansion is what investors love to see. Now let's dig a little bit deeper into the PC side, right? Qualcomm is set to push new chip designs that run Windows with built-in AI acceleration. More laptops and two-in-one devices will rely on specialized AI hardware to speed up tasks like voice recognition, predictive text, on-device training, or even more advanced stuff like local image processing. The plan is that by the end of the decade, almost every laptop on the market will have some AI capability. Qualcomm wants a big slice of that. Right now, a huge chunk of laptops run on x86 architectures from Intel or AMD, but there's a trend towards ARM-based systems, especially as battery life and efficiency becomes more crucial. That's exactly what Qualcomm's experience in mobile chips becomes valuable. If everything lines up well, they could own a major share of AI-enabled based PCs. Look, I can't just give a shiny picture without mentioning some risks. One obvious one is the handset market. Even though Qualcomm's trying to diversify, phones still bring in a large portion of their revenue. If global phone shipments slow down or if cheaper competitors chip away at Qualcomm's market share, that's bad news. Smartphone sales can be cyclical, swinging up and down based on customer demand. If the cycle heads downward while Qualcomm hasn't ramped up its other segments enough, investors might get spooked. They're also heavily exposed to China, which makes up a big chunk of their revenue. Geopolitical tensions, trade wars, or sanctions can always create issues. Companies like Huawei are pushing their own chips, even though manufacturing constraints have slowed them down. Meanwhile, Apple's ongoing attempts to build modems in-house could theoretically cut into Qualcomm's future revenue. Though honestly, their fear has been around for years and hasn't fully materialized yet. There's also a question about margins. While automotive and IoT are growing fast, they might not carry the same high margins that Qualcomm's used to with its handset chip business. And if they're trying to grow those segments aggressively, they might have to accept lower margins in exchange for market share. Now, they've been posting record free cash flow numbers. They reported around 11.2 billion in free cash flow for the full fiscal year 2024. They've also got over 13 billion in short-term liquidity. So it's not like they're strapped for cash. They can keep investing in R&D, keep making acquisitions when opportunities arise, and keep returning money to shareholders. EPS is up double digits over year, and analysts project it'll keep growing around 8% annually for the next 5 years. That might not be eye-popping as some high-flying tech darlings, but for a company this size, that's pretty steady. Let's talk about competition as well, right? NVIDIA obviously rules the roost in data center, AI, and GPUs. Qualcomm's not trying to dethrone them in that space. Don't get that twisted. Instead, it's focusing in on power AI at the edge. Broadcom's got its networking and data chip centers. AMD is mostly about CPUs and GPUs, and Intel is the same CPU ring with some forays into AI. Qualcomm's advantage is its heritage in mobile chip design, delivering power efficiency plus performance in small form factors. That's a big deal. If AI is going to live on your phone, your wearable, or in your car's dashboard, no one else has that same level of built-in expertise across modem tech, edge computing, and integrated systems. For a while, the lawsuit with ARM was like a dark cloud overshadowing any bullish case. but that's done. Qualcomm won. That means they can move forward with their next gen designs, keep pushing the envelope on the PC chips, and not worry about ARM trying to block the progress. Sure, new lawsuits can always pop up in the tech world, but that specific ARM case was the biggest potential monkey wrench. Now that it's settled, the path looks clearer. Even with those challenges, I think Qualcomm's got a unique position. They're not a one-hit wonder. Their modem tech is top of the line and remains a standard across multiple devices. Their AI strategy focuses in on real-world edge applications, which is an area a lot of bigger data center-focused companies haven't fully exploited. The automotive pipeline jumping from 13 billion to 45 billion in just a few years is an insane jump, and that's not just hype, it's actual design wins with major car makers. Plus, on valuation, the stock's trading at a discount compared to the other semiconductor players that are big on AI. In many ways, that discount is due to investor anxiety about losing Apple, legal uncertainties, and all those things that are mostly resolved now. And a general skepticism about Qualcomm's ability to move beyond smartphones. But if you believe in the growth potential of connected cars, IoT, and AI-enabled laptops, then you want to take a second look here. I see it as a mismatch between the market's perception of the risk and the actual prospects for long-term returns. When I step back and look at Qualcomm, I see a company that's evolving from a phone-focused chip maker into a broader tech powerhouse. They have a blueprint for growth in automotive, IoT, and AI. Their financial health is robust, they're still returning cash to their shareholders, and their forward valuation is well below some peers that don't even have the same breadth of technology. Yes, there are challenges, reliance on the phone business, Apple's in-house efforts, heavy exposure to China, but those feel like known variables at this point, and the risk is more than priced in my opinion. That's it for me. Please, if you enjoyed the video, just give me a like. I hope this rundown gave you a clearer picture of why I'm bullish on Qualcomm.